I've known Tommy Thornton for a number of years, and I've been looking forward to sitting down and chatting with him. He now writes a daily note called Hedge Fund Telemetry, which brings in a whole bunch of really useful information, and a lot of people, it's become their go-to daily note for a long, long time. So there's a bunch of stuff I want to talk to Tommy about. There's a couple of things in his career which are really fascinating stories that I want to dig into, and then I want to get his take on a lot of things going on in the markets right now, because he assimilates so much information and pulls together a really interesting snapshot. So let's go and see what he has to say.
I track sentiment, and I used Jake Bernstein's daily sentiment index as well as other sentiment polls. But what I've done is I've taken the raw data and I've turned it on to, let's say, steroids, to where I can track the actual futures contract versus the sentiment, and I can measure between 0 and 100 bullishness. So, for example, the day after the election, people were panicked. Bullishness was at 10% bulls, and that actually was a pretty good place to be a buyer. Currently, recently it hit 93% bulls, and the market started to cool off. And now we're around 67% bulls, and we're in the bullish or the neutral side of bullishness. It's extreme when you get above 80% bulls, and right now we're just hovering. Getting below 50% is when I say that's the majority line, and that's when things get a little hairy, and you start losing the bulls. And I don't think that the market is going to continue to go up like it has without some sort of correction. And I think a correction of 10% or more is incredibly possible. One of the things that I find really intriguing is the Commitment of Traders report on the VIX. Mm-hmm. And I had lunch 2 days ago with a hedge fund manager who worked 30 years at a very large, well-known hedge fund in Greenwich, and he told me it's a 9 sharp ratio if you've just shorted the VIX for 3 years. So when I hear a 9 sharp ratio for 3 years shorting the VIX, it's too easy. And the Commitment of Traders has an overwhelming amount of people that are set up short in the VIX. So if that starts to get, if something happens, some little break in the chain happens, I really believe that there's going to be an unwind very similar to something like 1998 or possibly 90 or 87. And that wouldn't surprise me.
Well, I mean, by its very nature, the VIX doesn't go from 9 to 12 and back to 9 again, right? It's when this unwind happens, it tends to go to 30, 40, 50. We saw it go to 80 back in 2008. That to me is the big danger, is that these guys have been shorting a very volatile instrument in the only period where it hasn't been volatile in its history, essentially.
And there's also some of the DeMark stuff that I use is not necessarily just on stocks, bonds, commodities, or currencies. I run DeMark indicators on economic reports, and I have seen the unemployment rate have what's known as the red 13 downside exhaustion on the unemployment rate. And on a monthly basis, it's happened 3 times before, and it preceded a recession. On a quarterly basis, I have also the downside red 13, and that's happened twice before, and that preceded a couple of recessions as well. So we could see a recession in the next year.